What is up, guys? Joe here, back with another video. Today is Tuesday, December 14th, 2021, and AMC is down over 20% for the week and 40% for the month. AMD has been falling on the back end of bearish news for the stock, reduced fiscal guidance for 2022, and lowered projections for the upcoming quarters. We are in the middle of a bear market, and some of the high flyers of 2021 are being hit the hardest. There's not a ton of positive outlook for AMC in the works, and investors are not feeling too bullish on the stock. So with that being said, today I wanted to look at some headlines, do some technical analysis, and see why I would not recommend AMC as a buy. So let's get started. So if we jump over to FinViz, there are a couple of headlines moving the stock lower. AMC GME have seen the apex of their interest, strategist says. GME stock and AMC stock struggling but remain up big in 2021. AMC shares swing wildly as investors try exiting 2021 favorites. AMC GameStop short sellers make a comeback as meme stocks buckle. Shares of AMC Entertainment swung between gains and losses on Tuesday after a sharp decline this month helped short sellers gain more than $1 billion on their bearish bets against the stock. The theater chain's shares were up 1.7% at $23.65 after falling as much as 10.5% to a new 7-month low earlier in the session. Shares of video game retailer GameStop, which have also tumbled in recent days, were up about 3% at $140.39. Both companies were at the heart of a meme stock phenomenon earlier this year, when individual investors coordinating on online message boards helped fuel stunning rallies that cost short sellers billions of dollars. Short sellers have gained $1.1 billion on their bets against AMC since the beginning of December, according to data from analytics firm Ortex, nearly halving their year-to-date losses. The estimated short interest at AMC increased to 19% of its free float from 16% at the end of November, per Ortex data. GameStop short interest has shot up 14% from 11% in the same period. The losses in the two stocks come as some investors have grown more cautious over some comparatively risky assets amid worries over a new wave of COVID-19 and a more hawkish Federal Reserve. After several years of strong market returns, some investors are getting a little worried about 2022 and thinking we're not going to have as great of a year, said Sam Stovall, chief investment strategist at CFRA Research. Worries that the Omicron variant of the coronavirus could hit theater attendance may also be weighing on AMC stocks, Stovall said. Investor interest in the options on the two stocks have also dropped. The 1-month moving average of open options contracts on GameStop is down about 66% from a record high in March, according to Trade Alert data. Similarly, open contracts on AMC have shrunk about 40% from their late June high. So jumping back into FinViz, we do see that there were a couple of analyst downgrades made in the past month. Wedbush gave it a new underperform rating and a new price target of $7.50. And B. Riley gave it a neutral rating with a new price target of $16. So if we look at the weekly chart, we do see that AMC had a giant pop in the month of May into June, and it did reach an all-time high of $72. And ever since then, it has been trading sideways, and it finally looked like it was going to squeeze in this descending wedge, but it managed to break support, and now it's trending downward. So at the time, during the past few months, this blue line running across can be seen as support, and the line above, this pink line, would be seen as resistance. And eventually the price action began to squeeze here, and it broke to the downside, which is ultimately a bearish signal. And we can look at it the same way within TradingView. You can grab your trendline tool here, and your support was found down here and resistance above here. And as you can see, AMC was trading in this range, and it was respecting the channel, and eventually it broke to the downside, and we could actually be headed lower from here. And also, you do notice that every time AMC was bouncing off of support here, bounce, bounce, light bounce, bounce, and resistance above, rejection here, rejection, rejection, and ultimately the biggest rejection here, and it broke through the downside and pushed lower. And if we look at our moving averages, I am noticing a death cross that was formed here back in November. So a death cross is when the faster moving average crosses below the slower moving average. So in this case, the blue line here represents my 8-day exponential moving average. So the scene of the crime here is when the blue line crossed underneath the yellow line, which is my 21-day moving average. So when a death cross occurs, this is a signal to be bearish on the stock. This is not a positive signal. This is not something you want to see. That means the moving averages are diverging and the stock price is headed lower. So on the flip side, the opposite of a death cross is a golden cross, and a golden cross is when you want to go long, be bullish. And for example, back in August, we did see a golden cross form here, and that's when the blue moving average, or 8-day, crossed above the 21-day moving average. Great, so in order to predict where the stock could be headed next, we can draw some Fibonacci retracement zones in order to accurately plot future support and resistance lines. So what you want to do is zoom out on your chart here, and you can grab your Fib Retracement tool here and drop it at the lowest point of the stock here. And the second anchor would be placed at the highest point of the stock posted back in June, right there. Great, and as you can see, AMC was trading in this zone, and that's between the 50% retracement zone and the 38% retracement zone. But it managed to break through our 38% retracement zone and headed lower. So our next level of support would be here, and that's our 23% retracement zone, and that is a support level of $18.16. So now, like we saw earlier, a lot of analysts are very bearish on the stock. There's not a ton of positive outlook for the name. There are a lot of factors working against this company, including debt, low attendance numbers, diluted shares, the list goes on. So personally, I would not recommend you buy this name. I see no signs of the trend reversing, and we could ultimately head lower, even into the 200-day moving average. So if we zoom out here, and we look at our weekly chart, and finally we enable our 200-day moving average. So our 200-day moving average is blue line down here, so that would be another level of support on the weekly chart. So this here would be a price target of $14.80. So we could potentially continue lower and either bounce off of this level, or if not, we can break through and push even lower into the single digit. And looking at the RSI, we are trending lower as well on the RSI. There is increased selling pressure, and this name continues to point downward and yet to reach the 30-point mark, which is oversold conditions. But even then, I still wouldn't recommend you buy the stock. There are better names out there. There are better chances to make strong gains in other companies, and some of my top picks would include AMD, Nvidia, Qualcomm. There's just other opportunities out there for you to make money. And this idea of a short squeeze and this idea of AMC going to the moon, I really don't think it's happening. The stock has moved up a lot since the beginning of the year, back when it was trading at $2 to $3, and we're lucky we've reached this high evaluation at this point. And lastly, I did want to mention, if you look at bar chart, the most active options, AMC came in at number 3 again with the most active options for the day. And throughout 2021, AMC has been a top options play for months, and continuously people use it solely as a day trading name. And we did today have a volume of 500,000, over 500,000 contracts traded, and the ratio was mostly even, half calls and 50% puts. But the bigger story here is a lot of investors were using this name as a liquid stock, so it was more of a day trade and not a long-term investment. So when you look at it through that lens, I wouldn't recommend you buy AMC, or I wouldn't recommend you hold it either. It's just a name that's been day traded in and out for the past year, and I think its best days are behind it. Moving into 2022, investors are going to look for stronger, healthier names. So what do you think about AMC? Do you like their movie theaters? Do you like going to the cinemas? How do you feel about AMC's outlook for 2022? Let me know in the comment sections. I hope you found this information helpful. If you have any questions, please leave a question in the comment section. I'll be happy to respond. Don't forget to like and subscribe. I'll see you on the next one.